For much more on this topic, Trustless Media co-founder, which was backed by Alameda, which is a company owned by Sam Bankman-Fried. Zach, great to have you on.
Frank, good to be here.
So first and foremost, why has there been so much shaky, why has the confidence in cryptocurrency, especially Bitcoin, been shaken when, in fact, the collapse of FTX, that was caused by risky investments, not necessarily the investability of cryptocurrency?
Yeah, the entirety of this year has really proven out that you can create new financial systems that tend to help people if they're looking for financial freedom as far as cryptocurrencies are concerned. But oftentimes you can replicate the same problems that we've seen in traditional finance. And that's been the real big lesson that investors have been learning here this year, right? And it's not just what we're seeing play out with FTX. We've seen this play out with a number of crypto projects, beginning earlier this May with Terra Luna. And then from there, shifting over into Celsius and the other major centralized exchanges that have run into the same liquidity issues, right? And it all goes back to a big topic we've seen play out, and one that SBF himself was attached to when it comes to regulations and how many of these crypto exchanges were over-levered. And a lot of transparency issues that, frankly, go back to what we saw in 2008, where there is no regulations in place, and these players are basically extending themselves farther than any users out there really know.
All right, so as we mentioned, your company is backed by Sam Bankman-Fried. Have you spoken to him? He's taken a lot of accountability, but have you personally spoke to him about what's going on?
I haven't had time to speak directly with SBF himself, but I've been chatting with a lot of former employees attached to both FTX and FTX US, describing, I think, what, the whole industry was really experiencing here, which is just being blindsided. If you think about how big FTX was, and how quickly they were growing, their reach among not just investors in crypto, but also celebrities and everyone else who had been talking about FTX, been talking about crypto, Tom Brady, the Larry David Super Bowl commercial. I mean, this is a big company. And you talk to the people who were inside those walls saying that, look, a lot of this stuff was going on and we didn't know about it. And you can take that at their word, or you can think about, what we've seen at other institutions, again, not to point back to Celsius as a prime example here, but Voyager as well, which FTX had stepped in to also rescue. There's a lot of things that I think, crypto is supposed to be more transparent than the old system. Right. And this is what we're kind of highlighting at Coinage.media is stories here that kind of get to the heart of maybe some of this stuff isn't as pure as we once thought.
So, Zach, I want to understand a couple of things, and mostly about Alameda, I don't know how you pronounce it, but at any rate, they were the investor in your company, right? And they were investing in and speculating in other companies. Where were they getting the money? Where were they getting money to do that, to put money in companies like yours? Where did that money come from?
I think that's what everyone's trying to figure out, the relationships between Alameda Research, which is, different than Alameda Ventures, and different than FTX, and FTX is different than FTX.US, right? All of these arms are very different when we think about this. And just to show kind of the amount of reach that Sam Bankman-Fried and FTX itself had was, Alameda Ventures was an investor in a lot of different companies in this space. FTX Ventures was an investor in a lot of different companies in this space.
But was it customer money in FTX that was being used to fund investments, whether it was Alameda Research or Alameda Ventures? Was it customer money that was being used?
Certainly not in our experience. No, I mean, when we talk about what the Wall Street Journal is reporting today, this is what everyone's trying to figure out right now is what did FTX do with customer funds? And their latest report is that more than half of the $16 billion they had in customer funds was used to help function and finance Alameda Research's trading arm, which would be surprising and frankly something that I think, even those employees I talked to at FTX US, that arm, which is heavily regulated, were surprised to see because that would seem to violate their own rules and regulations, customer service agreements at FTX. So there's a lot that's changing right now. And the connection between all these things is something that I think, again, gets back to the point of why people in DeFi, decentralized finance, the transparency of where crypto is going and where the industry wants to go, and where centralized exchanges were, and replicating a lot of these same issues around not having enough transparency, which money is moving where, we got back to the same issues that crypto is trying to solve. So that's kind of, I guess, the irony of all of this. And seeing it all play out is tough to watch if you've been in crypto as long as a lot of people have.
All right, Zach, thank you very much. Zach Guzman, we appreciate your time today.